Morning traders, welcome back to Morning Cuppa 88. Aiman here. Okay, so looking at the S&P 500 here, it closed higher on Thursday's session, extending its record run, right? So the move was led by gains in tech as well as the AI-related stocks with semicons and Nvidia in focus after positive sector flows, right? Investors' sentiment also lean on hopes for Fed easing and the resilience in corporate earnings. Well, overall, the index continued to ride the tech momentum, right? So technical wise, it still remains on its record high after breaching the 6,700 points and maintaining its higher high structure, signaling the uptrend, right? So looking at the important event for next week, we got NFP and as well as unemployment rate that is on the list, right? So investors are waiting for the announcement to gauge the Fed rate decision. Right, so looking at the China A50, well, it closed higher in yesterday's session, well, aided by the renewed optimism from China's newly announced stimulus tool, right? And also the tech sector remains bright, amid broader softness, which also support the overall index, right? So looking at the chart here, we are positive on the China Hong Kong market, right? Eyeing for the 15,500, also 16,000 resistance. So downside wise, we saw support is at 14,700. So yeah, as for the WTI crude price futures, well, it slid almost 2.1% on Thursday's session. So supply worries are creeping back in, and talk of OPEC Plus hiking output, right? Also, after the recent gains right here, some of taking likely kick in, and weak demand signals may have also pressured the prices. So we see yesterday's drop is just a pullback, not a reversal, unless demand data disappoints further. Also, we have a stop loss at a $60 level for now, and we are still positive on WTI. Well, if it crosses below this $60 level, then we might shift to a negative trend bias. So moving on to the FKLI, well, it climbed, I would say, modestly towards the close of yesterday, right? Reflecting the broader uplift in the Bursa as sentiment turned more positive regionally. Well, again, tech, utilities, healthcare, those sectors led charge, which helped to anchor the rate rally, right? So yesterday's move, I think yesterday's move was quite constructive, but yeah, remain careful for any pullback to happen. Well, again, in terms of technical, resistance remains steady at 1675 point resistance, followed by 1700 point. Near-term support is at near-term support. I mean, the immediate support is at 1570 points. And well, if any pullback to happen, like what I mentioned just now, I saw that 16 16 points or 16 zone to be the deepest zone for the pullback for now. Also looking at the sector performance day to day, we notice that tech again to remain as the top gainers at almost 6% yesterday, followed by telco at 1.2%, 1.24%, right? So yeah, this is our watch list. And okay, so if you remember yesterday, I showed this chart to you guys, right? The telco chart, the Bursa Telco Index chart, where I highlighted that my threshold is at 497 level, and true enough, this level is now breached yesterday. Okay, so now what do we need to do, right? So okay, in terms of technical analysis, we uh there's this thing called the first guide, which is this level, which is 497 point resistance. Well, basically it is like saying, oh, the bullish momentum has kicked in, but is it ready to travel higher? Uh now where it comes the second guide lah, right? So which tells the true confirmation level. So to me, I saw that 501 or 501, 501 point level to be the second gut. And if the index breach above this level, you know what to do, right? So I suggest we take a look at the telco names next week, as we are on Friday today, right? So towards the end of the week already, right? So maybe uh, I can show to you some of the telco stocks, right? We can take a look at Maxis, where the price now is retesting the 3 ringgit and 70 cent level. So if the volume kicks in next week or today, right? So the stock potentially climbing higher towards the 3 ringgit 90 cent. Well, the support is at 3 ringgit and 50 cent. Also, if you're keen for the higher exposure telco, right, you may take a look at TM as well, right? So technically, to me, it looked attractive, right? So the bullish trend remains intact. It is now also been trending higher, uh, uh, going above its moving average, right? So high structure remains solid. um also also right, yeah, if you can recall on Jeff's presentation recently, he did mention that TM is one of his top pick alongside with Axiata and also Celcom DG. Right, so moving on to our trading stocks for today, we have TMK Chemical, right? So the stock is in its pending breakout formation at the 1.40 ringgit. Well, with that, we expect the momentum to remain steady, bullish, and the stock able to climb higher to test the next resistance at 1.50 ringgit, followed by 1.60 ringgit level. And if the stock to clear below the 1.30 support, this might signals for a further pullback. Also, next we have Edeltech Holdings, right? So the stock yesterday has experienced a breakout where it reached the 46 cent level with I would say a high volume here. So if the bullish momentum persists, right, and continue towards the 49 cent level, yeah, second resistance is at 51 cent level. So do watch out for or look out for the 44 cent level support for any attempt of reversal. So thirdly, we got Me Technovision here. So the stock has breakout above the resistance of 2.55 ringgit. So with that, we expect the momentum to remain bullish and the stock to propel higher towards 2.65 ringgit, followed by 2.75 ringgit. So keep an eye to watch uh, at 2.45 ringgit support. Well, and lastly, we got SolarVest Holdings, right? So the stock also has breached the 2.90 ringgit. With that, we continue to expect that the stock to propel higher to say 3.05 ringgit, followed by 3 ringgit and 20 cent level. For now, support is back at 2.75 level. So we have uh, three breakout stocks here. Edeltech, Me, SolarVest, and also pending for TMK Chemical. Right, so moving on to this FCPO. Well, on yesterday's session, it gained about 1.4%, extending its rebound, likely fueled by the expectation that supply will slow towards the year end, right? So I think the industry is signaling that investors may decline from their recent high, tightening the balance, right? However, at this juncture, we still remain our negative stance for the FCPO, where we eye for the 4,000, 4,250, and also for 150 support level. So we deem that this counter trend pullback within the downtrend channel. Right, so I'll stop here and pass the floor to John. Thanks and happy trading. See you guys next week.
Thanks, Aiman. Let me continue with gaming sector notes today to follow up on our buy call on Spot Toto yesterday. So we keep a neutral call on the sector because we see the admin valuation of number forecast operators is fair right now, reflecting their defensive nature and limited growth catalyst, while offering an attractive dividend yield 6 to 8% in FY26. Among them, we continue to like Sports Toto for its compelling valuation and superior dividend yield. Sports Toto stands out as a top choice for investors who seek for high income stability with limited upside from growth catalysts in the sector, making it a strong defensive stock pick. Out of the two companies under our coverage that reported results between April and June, Magnum's result came ahead of our forecast, while Spot Toto's met expectations. Magnum's better earnings stem from a lower price payout and a substantial saving in their financial expenses. And moving forward, we expect the second half to remain challenging, with trading conditions weighed down by persistent illegal lottery activities that continue to erode market share from legal operators. And Lotto game sales per draw for both Spot Toto and Magnum have normalized this year, with Spot Toto around 16 to 18 million and Magnum around 13 to 14 million. Third Q25 surge for Spot Toto above 20 million sales per draw on the back of extraordinary jackpot rollovers that temporarily boosted player participation. Meanwhile, the earnings momentum will remain highly sensitive to luck factors and any potential government policy shift on enforcement against illegal number of forecast operators. In addition, we expect Spot Toto gaming sales to improve in the coming quarter, supported by the recent accumulated Supreme Toto jackpot. Meanwhile, the HR Owen UK subsidiary sales should also see a modest lift with the upcoming September couplet month. Despite their upcoming couplet month on September, their margins in UK subsidiary is expected to encounter ongoing challenges due to weak economic conditions, high inflation, and elevated interest rate in the UK. But as Spot Toto mainly relies on its lottery operations to finance the dividend payments, these issues at HR Owens are unlikely to materially affect their dividend distribution. And that's all from me today. Thanks for spending your time with us this morning. Happy trading and see you again next week.